to the Trash Talk Podcast. Hey, what's up? Welcome everybody to the Trash Talk Podcast. Thanks for logging on. Thanks for being on video. Right now, my co-host, Thick Mick, is having technical difficulties, but he should be on with us shortly. But basically today, we just wanted to get on, have a quick little episode because we have on a guest today. One of the people that we listen to often, especially when it comes to stocks, investing, TSP, if you haven't heard of that, which is really important. And I just want to give a quick shout out to him. He's going to be coming here soon. And then I just wanted to talk about next week real quick. We have a few videos popping up next week. So please stay tuned, make sure that you're in live and let us know what is going on. But let's get Mick here. All right, Mick is back. You got some technical difficulties. What's up, Mel? How you doing, man? Can you hear me? Still can't hear me. It's all good. All right. So once he hears us, we'll bring him back. But for now, let us get Corey Gallagher into the show. Corey, can you hear me?
Hey, what's going on, man? Sorry, as you were introducing me there, you kind of sound like a robot, so I couldn't really hear everything you were saying.
Gotcha. Okay. Well, hopefully people in the comments can let me know if I'm still breaking up right now. Internet can be a little spotty. These Zoom calls or whatever this site that we're on, can be a little spotty. So hopefully, can you hear me now, though?
Yes, for the most part.
Awesome. And let's see if we can get Mickey on the line, too. Mickey, can you hear us? All right, he's still having technical difficulties.
I can't hear any fucking thing.
He looks like a lost puppy.
This is so frustrating, man.
All right, well,
what the fuck? Dude, what the hell?
We'll bring him back on here in a second. But for now, all right, cool. All right, I got somebody that says they can hear us just fine. But I do want to introduce Corey. We call him the funds whiz extraordinaire over here at Trash Talk Podcast. But we're happy to have him on. Corey, go ahead and introduce yourself to everybody.
Hello, I'm Corey Gallagher. I think you already handled pretty much everything. I run a Facebook group. It's a little group that I started just to talk about TSP. I was part of probably about 4 or 5 different TSP groups. I noticed a lot of them, they kind of pushed a certain agenda. Like they only want certain posts for things that they're pushing, things that maybe they want you to pay membership in order to get, stuff like that. And I just kind of got annoyed by a bunch of posts getting constantly removed. And so I was just like, a lot of people were getting threatened to be kicked off the Facebook group just because they weren't staying on topic of the conversations the people wanted to have. So basically, I just took that to want to do my own TSP group. So it's just TSP Conversation Strategies. If you look it up on Facebook, it's basically just anyone who has any questions. Originally started off just coworkers and friends because I have a lot of coworkers and friends who they might not be super familiar with the TSP and how to manage it and all of that. So I just want to kind of create it to kind of answer some questions, kind of pay it forward a little bit. I had one individual in my career who kind of pushed me to start my TSP earlier than what I would have done it, and kind of coached me along of what I need to do. So, and without that individual.
So before we get into that, can you explain to people what is TSP?
Oh yeah, for sure. So TSP is a thrift savings plan. And that's basically like our retirement system in the military, or if you're a government employee, a federal government employee. So it's kind of like our 401k for our company.
Gotcha. Okay. So you basically go ahead and put your funds into that company or into that funds manager, and then they go ahead and invest in whatever funds are allocated, correct?
Correct. It's not as there's not as many options as some of the other 401k options or websites, but this one, it kind of simplifies it, which is nice for individuals who don't do a lot of research on how to invest their money. It kind of makes it pretty straightforward. So it's a little better than some options.
Gotcha. Okay. And I apologize to everybody right now. We are having a little bit of a internet issue, but hopefully it fixes itself, because internet is a crazy thing. But as we go through this and as we're talking to Corey, this is actually not really that much of a trash talk episode. This is more of like, let's learn, let's find out how to make some money episode. So if you guys do have any questions about investments, funds, let us know so that we can ask Corey here live. I know he has a lot of knowledge, maybe not all the knowledge, but at least some of it. But that being said, let's talk about the funds itself. So there are certain funds that go into TSP, correct?
Correct.
Okay.
So to get into some of those funds, the first.
Okay, so we're losing Corey.
I feel like we're on a little bit of a lag.
Yeah, you're fine, but the internet's kind of getting really, really bad right now.
I just want to say I have an idea. First off, I want to apologize for missing the first half of the first 5 minutes of the episode. My internet is at least better than Corey's. And it's okay. It's not a big deal. I'm Donald Trump, man. It's cool. My vaccine is okay. My vaccine was just kicking in. I just needed to take it away a little bit, but it's all right. I just want to say a big shout out. Thanks to Corey coming out here. Thanks to Josh for putting this on once again. The GOAT himself. Natalie is shipping with Grace Creations. I heard she's shipping the shirts today. Excited to have matching t-shirts with Josh coming up. And
hell yeah.
Corey, man, I just want to say as a day-to-day investor, why the hell should I invest in the TSP if I can make money other ways?
So what I would say is if you're somebody who works full time and you don't have the time, so if you don't have the time to do all those investment research, so you don't have the time to go into all these different companies and figure out what their portfolios look like, what their finances look like, if they're going to be making any big moves or merging with other companies or anything like that, that can be very time consuming. So you're working a full-time job and you come home and you're exhausted and you really just don't feel like doing that for the rest of your time off. I would say long-term investment, kind of like TSP, where you're kind of just putting your money in an index fund. That is a little bit easier. Also, I'm sure you've heard of Warren Buffett before.
Oh yeah, definitely heard of Warren Buffett.
Well, Warren Buffett has this saying. So exactly. So Warren Buffett has this the saying where basically, I don't have the quote right up in front of me, but it's basically if you take index fund, the 500, let's say, and you invest in that over a 20-year period, it's almost impossible to find a investment fund who consistently beats the S&P 500 average year in and year out over a 20-year period. So if you're looking to really invest for a long term, for retirement. So if you're 20 years old and you're looking to retire at 60, that's a 40-year period. That's a pretty long term. So if you want to just throw your money in a fund and not have to worry about it day in and day out, because S&P 500 averages roughly about a 10% return every single year. So if you're putting your money in every year, you're watching it roll over.
Go ahead, Mickey. Go ahead.
So that's a trash ass idea, man.
What you got? Am I cutting out?
No, it's no big deal. So what I'm going to provide to you is, so you heard of FANG, right? We have Facebook, we have Apple, Amazon, Netflix, and Google. They're the top 5. Well, they're called FANG. They're the biggest people in the world, right? That's where people want to invest. So all Apple did last year was go up a whopping 35%. So if you were a long-term investor and you were investing into this stuff, why not invest in a company who has growth? I'm talking growth. I want to see growth. I do agree that the S&P 500 is for bitches and they want to like invest in like weak ass approaches, but I'm somebody who has a big risk and you're somebody who has a low risk. Please explain to me why you wouldn't invest in, say, a FANG stock, say a NIO, a Chinese EV stock that's coming on the market, something like that. And I completely agree with you. The S&P 500 is something that you would put your money into and not worry about it. Guess what? You are 100% correct. That is 100% true. But I want to make 30% next year. I want to make 40% next year. I want to make a lot of money. What? There's nothing in the S&P 500 realm that can do that. What's your approach?
I would disagree with that. So first of all, I like what you're saying. Yes, the way you are doing it is a little bit riskier. You could potentially, like I have a friend who does individual stocks, and he has months where he's like, he's killing it. Like he's pushing, 100% gains. And then the next month you see him drop down. He's like, well, I don't want to talk about it, because it's almost impossible to always pick the successful one. If you're talking about FANGs though, there is actually a FANG index fund, which I wish TSP would include. I think that would be a very good option for them to include. And there's a huge community of people pushing to get more options available for the TSP. But it seems like the company is kind of dragging their feet, because that's a lot of work on their end in order to just basically give more options for us without them making any more money, if that makes sense. So from a company standpoint, they don't really have very much incentive to add additional options. But like you were saying, if you're looking to get higher return rates, there are different strategies that you can use. There's two strategies that I like to use, and I kind of combine them, which is a little untraditional, which is seasonality investment, because there's certain times throughout the year where stocks are a little bit better than other times of the year. Like I said, through the year, there's an average return of 10%. Well, you say timing, but it's using historical data. Like if you remember back in September, everyone was talking about how the market dropped off and we had this huge drop. It was like, oh no, it's another depression, blah, 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 recession or whatever they want to call it. Everyone was thinking it was going to drop back down. Well, if you look at certain, so I can go ahead and pull something up. I hope you all be able to see it real fast. But there's like seasonal averages. And if you look over, this is from 1964 up until 2015. So if you see there, you can kind of see. Yeah. So basically that red one that you see, every single year, September averages 0.5% loss. So for instance, if you know that on average September is a poor month, as well as a poor month for investment, you can move those into somewhat safer investments like the F fund or the G fund, which we haven't really talked about what they are yet, but you can move into those funds, and that'll help save that investment, which could bump up your return for a good, 1%, 2% for the year.
Wayne Davis saying that he made 23 over the last year, and he has no idea what the hell he's doing. So, I mean, it's possible to get a good return. And I mean, I know personally, just from talking to you, Corey, that you've actually had excellent returns, like very good returns, especially in this past year, what we call PIP. So if you can go into, I know that you said those two things are what you mostly attribute that to. So go into one of those and let us know, like, how can we figure out how to do that with our money?
So the other strategy would be kind of timing the market, as some people would say, but it's less timing the market, more reading what is currently happening. So the market has little tells, and I know Mickey can get into this because he does a lot of 120-day moving averages, right? Think Mick?
200 day.
So anyways. 200-day moving averages. So I do a lot of 10-day moving averages as well as 60-day moving averages to kind of see where there's support in the market. So if you're seeing a drop in the market as it comes close to like the 10-day moving averages, that they call support. So a lot of times when it hits that 10-day moving average, it will bounce back up for a little bit. So what you can do is in the TSP, you get 2 interfund transfers per month. You can actually get more than that as long as you're transferring normal funds over to the G fund. But anytime you're moving funds outside of the G fund, you can only move twice. So what I like to do is I like to do a swap of have my funds go from being invested into stocks into the G fund based off of what I've timed out to be a correction in the market or one of those gap downs. And then a day or two later, I'll jump back in the market at a lower rate, and I'll watch it kind of bump by a good 2 or 3%. That keeps me roughly about 2 to 3% above the market each month, which over 12 months, you're looking at 24 to 36 extra percent.
So you're basically buying in. So you move back out, and then you wait till it drops, and you buy in the shares at a lower price for it to pop back up. Am I getting that right?
Correct. And it doesn't work out every single month, but a lot of times if you see abnormal activity, like a large jump up, like a 1.5%, 2% jump up, and then the next day you see another 1%, 1.5%, like that's kind of abnormal for the market to have that big of jumps. And so a lot of times you'll see a small correction the next day or two. You can kind of expect the market to come down a little bit. Again, this isn't 100%. You got to kind of read it, because there's days where you'll see a bunch of positive days in a row. So you got to kind of read the market and be observant of what's going on in the news, things like that, and help predict these a little bit better. But also you're kind of watching to see when it's going up and then it kind of down, and as it's hitting like a roller coaster, like the top of the hill, that's when you want to jump out. And I try to do this once a month. This past year, I was 8 out of 10. So I had 2 months where instead of it dropping, it continued going up, and the next day or 2 days, I just bought back in. I missed a little bit of a gain, but overall, I'm up a lot more. I think for this year, like you were calling out for, right now, my PIP is sitting at 78% return over the last 12 months.
Wow, 78%. That's you're 4/5 of the way to cover your investment that you put in. So that's amazing. So one quick thing, I have Wayne Davis on here. He asks, why invest into something that you can't withdraw until you're 60 to 65 without being penalized? What are you thinking, man?
So you actually can withdraw without being penalized. And what that's called is a loan, a TSP loan, but you have to repay it. So you don't get penalized for doing that because they let you do that. The only issue is you can only take out what you put in, not what you've made. So you can't withdraw your gains. What you got, Mick?
What I'm going to say is I completely agree with Wayne Davis. I would have to go, man. So basically what I do is, so I trade options. I mean, I don't know if you know anything about that, Corey. I'm doing calls and puts. So basically what I do is I predict the market to go up or down. And so I buy 6 months out. And say if the stock goes up 5% in my portfolio, depending on the stock, that could be 10 to 20% increase, and I could sell. And I do that in the matter of 2 weeks. So I made 20% in 2 weeks. My question, and for you, but also I also have to say this. This is a complete disclaimer. I also pay over 30% in taxes a year because of my day trades and all that stuff. So every 10,000 I make, it's only 7,000. So
that's insane.
That's the truth. That's the truth. You have to.
I was going to bring up. You say that you get penalized for taking out from TSP, but you also kind of get penalized in taxes the other way.
True. Which I'm calling an ace and ace. I'm just telling you the truth, man. I mean, it's a thing. I mean, last quarter I made so much money. I did a quarterly tax thing. I paid taxes last month.
I mean, Natalie's making a good point, though. These funds are not to like make money right now. These funds are to make sure that you hit that retirement age and that you can actually stay in retirement age and not have to worry about money. I totally agree. This is whenever I invest in TSP and I move my funds around and I make sure I have that's my future funds. because I still play the stock market. I'll buy a stock here and there, wait for it to go up, sell it, dump it, do what I got to do. But every time I put money into TSP, which I max out my contributions, which I want you to talk about that here in a little bit, Corey. I make sure that it's because it's for my future, or it's for if hopefully, hope to God I don't pass away, but it's for my family's future. Also, real quick, is that an interest-free loan if you withdraw? I think it is an interest-free loan as long as, it's up to a certain time. Corey, you can talk more about that, right?
So I'm not completely experienced in that because I've never done it. Kind of like you were saying, it is something that I want to completely act like it doesn't even exist until it's time to start withdrawing for it, because too many times you see people try to build up their savings. And your savings kind of like a retirement thing where it's like money out unless it's absolutely necessary, unless it's time to buy whatever big thing you're saving up. A lot of people though, they kind of treat that as a secondary checking account. And if you have this option where you're investing and you want to go do something, sometimes you might just sell off some stocks in order to just go buy something. So it's not really, so kind of like what Natalie, it locks you in there. So you're forced to keep that money for when you're not going to be working. As far as this loan, I believe it's interest free. I have looked up and checked that, but I'm pretty sure you can take it out, and because it's basically like your funds, you just put the money back in over time.
It's a peace of mind fund, but the thing is that this peace of mind fund that I've been getting into a lot recently, I've been seeing people become millionaires. And I'm not just talking about one, I'm not just talking about two, I'm talking about $3, $4, $5 million that they have once they turn 60, so that they could wake up, get their ass out of bed every morning, go play golf every day, drink a couple buds, and not have to worry about doing anything. So, that's my goal, man. My goal is to wake up and be one of those old guys out there on the golf course, not worrying about shit. So, but let's talk about real quick about a contribution, or maxing out those contributions. Because a lot of people ask me, they're like, so how do you afford it? How do you afford to max out every year and put in as much money as possible? And for me, it's easy, bro. It's just pretending the money isn't even there. I just go ahead on my little slider, slide it out as much as possible, and not even worry about it. What do you think?
I'd say it's a lot harder than that. So I've never actually maxed out my contributions, but instead I've read them, and every time I get that little bit of I get that promotion or raise. In the military, we get raises after every 2-year increments, so it goes up a little bit. So I like to take, first of all, since our contributions are based on a percentage, a little bit of that bump goes towards our TSP, but I like to bump it up like an extra percent, just so that way, instead of getting like a $300 raise or something like that, I might get a $100 raise, and that extra $200 goes to my TSP. And I'm getting a $100 raise, but in actuality, my TSP is getting a $200 bump up each month.
Gotcha. Okay, that makes sense.
But me personally, yep. So the TSP, I believe, is capped out at $19,000 a year to be contributed to your funds, whether it's traditional or Roth. And I've been averaging probably about $10,000 for mine and $10,000 for my wife's. So neither of us are capped out, but I still think that's a pretty good amount of money to be throwing in.
That's a great amount of money. $10,000 a year, and then on top of that, you're getting 78%. So you're looking at 10.7 minus. I don't know if you're doing Roth or traditional, but Roth, you're putting that taxes before and then pulling it out without any taxes once you turn 60. So I know you're probably doing amazing then. You're probably sitting at a $16,000 a year account. Which is that's really good. A lot of hedge funds want to be that good. So,
so my question for you, Corey, would be:
so it's actually with compound interest. I'm also making a. Go ahead.
So, what is the difference between how you invest and why wouldn't you invest in an ARK, ARK? ARQF, ARQW, all that kind of stuff. ARK, it's run by, there's different different funds are run by different things. ARK continuously out freaking runs all the S&P 500 ETFs. What is your advice against people who would invest long term through the S&P 500 versus an ARK fund, which they have that dominant bitch, dude? That chick is so fucking dope. She dominates, dude. She runs the market. Like, why would you suggest to do S&P versus investing in ARK?
I would say that's up to that individual. If they want to do their research and figure out what kind of funds they want to invest in with another company, the new generation using a blended retirement, they have an automatic 5% match for their TSP into the traditional side. So if you would want to do a 5% match, so put 5% in, get that covered in your TSP, and then put the rest of whatever money you want to invest into a separate account. I mean, that's somebody's option. Anybody can do that. No one cannot. So my daughter's waving to me. So with that.
No, man, I think we lost him.
It's totally on.
All right. Yeah. So,
and because different companies have different management fees. So T is the lowest. So other companies might.
All right, Corey. So you might have to go ahead and say that one more time. Yeah, we lost you throughout the whole segment, that whole answer. So if you can go ahead and repeat that for us real quick.
So what was I saying? So what I was saying, basically, it's your option. If you want to get that 5% match by throwing 5% into your traditional TSP for the new individuals who are in the blended retirement system, there's nothing that beats a 100% match in your money. So as soon as you invest that 5%, you get 5%. You get that money matched, which is a 100% return on your money, which there's no investment that beats that. I would say that. And then if you want to go ahead and do like something that Nikki was just suggesting, and then do your research into those different companies and maybe take that money, instead of investing in TSP, invest in whatever kind of account that you want to do that on the side. That's fully supported. I mean, it's whatever you want to do with your funds. The only thing I would warn against would be making sure you're not going with a company that has a high maintenance and management. TP they're kind of known for having very low maintenance fees.
Gotcha. All right, man. I mean, this has been a lot of good information. I mean, I'm definitely going to give this because, right now I'm recruiting and there's a lot of young guys that 18, 19 years old. They have no idea what they want to do with their money. They're going to be at basic and tech school and they're going to have like $6,000, $7,000 to blow. So I'm definitely going to be letting them know, hey, start investing in your TSP. Why not? Start investing in that retirement. What you got, Mick?
I just want to say shout out to Josh. Shout out to Corey, man. You guys are killing it, man. First off, I want to say thank you to Corey, man. You're putting fucking men and women fucking boots on the ground. You're killing it. I will also want to say thanks to Josh. A lot of you may not know he's the people who get him to Corey, man. He's been doing it and he's gonna keep on doing it, man. I've known these guys for 4, 5, 6, 7, 8, 9. The price is right. We can go on forever. Like these guys are amazing, man. And I'm super excited to call these guys my friends. And I just want to let you know if any of you guys are trying to become guardians. I know some people. So these guys are awesome. I just want to say thank you very much for everything you do every day. Corey's haircut sucks. It's cool. It's great. Josh can't even fucking comb his hair straight. But don't worry, they'll get you where you need to be.
Hey, but I do want to go ahead and highlight one thing for Corey before he steps off real quick. Let's see if we can get this going. I do want to highlight his page. There is a lot of good info on there. So if you guys do get a chance to check it out, it's TSP Conversions and Strategies. So go ahead and hit that like, follow that group. They have a lot of good info on there. Even if you're not in the military, if you're not in a federal job, it is a lot of good information because some of these funds do transfer into the civilian world, some funds that you can invest to. So anybody that wants to go ahead and do that, go ahead and hop on and like that page. Thank you, Corey, for coming on. It's been a pleasure, man. A lot of good info. Hopefully the next time you come on, the internet isn't that bad. But hopefully we can get under better circumstances, maybe even in person one day once COVID goes away. So thanks for coming on, brother.
Yeah, it'd be cool. All right. Thank you for having me. I really appreciate you inviting on and spread the word.
Yeah, definitely, brother. You have a good one. Okay. So Mick, a lot of good information today, man. A lot of good information. I know that you're not the biggest fan of long-term investments. So I want to hear you speak your piece, man. I want to hear you speak your piece about those short-term buys and puts, which in my opinion is straight up gambling. Really is.
So first off, definitely gambling. Gambling goes into the market when you pretty much are buying calls and puts. So basically calls and puts. So first off, for the viewers, we'll talk about calls. Calls is basically where you describe a strike price of a stock and you think it's going up. Puts or poots or whatever the fuck you want to call it.
Puts.
You're predicting it to go down. That is the gambling of the market. You could short a stock. What does short a stock mean? Short a stock means that you are, through your financial company, basically Josh's stock is worth $80. I'm buying 100 shares at $80. When it goes down to 77, I will sell them 100 shares for $77. What does that mean? I just made $3 on every single thing because I shorted it.
Yeah.
If that makes sense.
But so there is that sense to where if you're not paying attention, if you're not doing your homework, there is a lot that you can lose, especially if you don't set those limits, So anybody who does watch this video or anybody who's listening to stream, don't go out there and just start shorting stocks. All right. Make sure that you get the right info. Make sure you know what you're doing because you can lose money pretty easy. Okay. So make sure you guys are doing your homework. If anything, hit us up. I don't know crap about it, but Mickey does. Look, he's showing his portfolio and Mickey's really good at it.
Basketball draft, dude. I'm fantasy basketball draft right now.
All right. So we're going to let Mickey get to it. But anyways, thanks everybody for hopping on. Today was really supposed to be a mini episode, but we are going to have another stocks talk so we can talk more about the actual stock market and not just the TSP funds itself for your future, but what you can invest now to make a good little turnaround within a year or two. What's up, Mick?
So I just want to say, hey man, sorry guys, I wasn't really kind of into this one. I was fighting technical difficulties. I was trying all this different stuff. Basically, what I want you guys to get out of this episode is the S&P 500 is trash. It's a good long-term investment. But if I was trying to get my buddy on today, I think we're gonna do it sometime this coming week. But there's plenty of ways that you could make 20% every quarter at least. And I want to show you them ideas. What Josh was saying is
real quick, we have Wayne Davis. He says, do either of you guys own homes and have you refinanced recently? Yes. So I bought a home about almost 2 years ago now, maybe a year and a half ago. And it was at a really high rate. But now I refinanced here a few months ago, actually a couple months ago. And it dropped drastically. I'm paying a very, very low rate right now. So that was a really good option for me, even though I'm only going to be in this area for a couple more years. It just made more sense. How about you, Mickey? You own your home?
So disappointing that I own 2 homes. Oh, Wayne Davis. But definitely, I would pay attention in the next the near term. So basically, housing prices go up when financing rates go down. Financing rates are at an all-time bottom right now because of what's going on. I think they're going to stay there, judging by the Federal Reserve's outlook in 2021 till at least July. I don't think we're going to see a housing market decline, but I would say if you were doing it for a profit, I would sell between February and May. I feel like that's going to be the peak. Because the more interest rates go up, housing prices come down just because of the purchase price.
I mean, it also depends on which state you're at as well, because Florida, we just voted in for as an increase of minimum wage for the next 5 years. So by 2026, it's going to be at a $15 minimum. And then after that, each year it's going to go up due to inflation. So for us, according to what a lot of people, I watch a lot of other people, especially from the Florida area, talk about it, talk about the housing market. It's actually going to be on the up and up because more people are going to be able to afford the houses and the housing market is going to have to catch up. And, whenever there is a need for homes, there's always going to be a very low supply. There's always going to be a huge demand. So you're going to make a lot of money. But then again, Mickey's right. It really all depends. You really have to do your research on that. But for me, it's just another investment because I'm going to lease it once I get out of here, or at least attempt to lease it because I'm in an area that there's a lot of people and very little land. So I'm going to say it depends. All right. Well, Mickey, you look very, very busy. So we're going to head out. Thanks, everybody, for watching. We're really happy you guys tuned in. Thanks, Corey, again, for coming on. He's the TSP Wiz. Go ahead and hit up his Facebook page. I already highlighted it. Thanks for coming on, everybody. Mick, you have a good night. Enjoy your Saturday night.
Dog, I just drafted fucking playoff P in the first round.
Oh, okay.
Fucking frustrated. I'm frustrated, man. This is the most picnic moment in goddamn history, man. What the fuck is going on, man? I'm so sick. All right, yeah, I'm out of here.
All right, brother. Thanks everybody for watching. Have a good night.